Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Kansas City and Minneapolis wheat markets. I'll start with Kansas City wheat. As you can see, throughout July and August, the downside had been given a testing, but the low water mark on the 18th of August was pivotal to the construction of what happened next. Back then, the market failed to break down through the neckline, currently 819 of the big old 50% Fibonacci line, of the October 2021 to January 2022 move, spinning on its own axis with a pipe bottom and moving higher. Since late August, the market had started constructing a new pattern, a bull channel, currently 991 to 1054. This was easy enough to do once prices overcame the short-medium moving average, currently at 923, as there was a small free zone above all the way up to the July high at 957. However, when the market reached the 957 area, I thought there might be issues. You see, 957 is the gateway to a congestion area above between 957 and 1001, within which sits the slowly rising long-moving average, currently 990. A lot of this congestion was made up from 2011 and 2012 and was easily breached on the way up in February and on the way down in June. However, back in those days, they did not have the additional reinforcement of the long-moving average in their midst. And it is this, along with the upper bull channel line, that constrained the market topside last week. Yet in the process, the market took on a new shape, primarily caused by the weekly key reversal down made last week. In fact, it's hard to judge if the shape made the weekly key reversal down or vice versa. Last Friday, the market broke down through the lower bull channel line, plus dropped out of the overhead resistance area and even below the medium moving average, currently 944. Prices have continued on lower for now, much like Chicago wheat, though it is not a complete duplicate. This market has two avenues, though there are no doubt more available that will make themselves known. First is a straightforward move down with potential targets for the bull channel. This may give a primary target on the downside in the 903 area, whilst the secondary harder to reach target X1 is way down below in the 759 area. And this leads to the second avenue. It is a possibility for the whole of the July to day action being not just a flat bottom, but a flat bottom with an extension. Extensions have something like a bull flag within them, and that is what may just be being built here since mid-August. Personally, it looks a little slack as a pattern, and is an untested but if the short-medium moving average, a little below, currently at 923, manages to hold the market up and we then see prices revert back up, well, then this second scenario, the larger bottom with an extension that may or may not be a bull flag, suddenly looks a lot more interesting. Watch what happens at the short-medium moving average carefully. Minneapolis wheat. Over July and August, this market had been a sideways to lower channeling market and not as exciting as earlier in the summer. In early September, we saw the start of another bullish pattern. It seems to have been prompted by the approach at a steep angle from above of the short-medium moving average, currently 939, and rather than this moving average acting as a cap on any rise, it instead acted as a trigger for a move higher. This move higher seems to have been slower than in the other grain markets, but prices did start moving higher in early September into a new bullish pattern construction. This is a nice segue into the bull channel come ascending, expanding wedge pattern we've seen, currently between 1015 and 1100, developing in this market. I'd previously called this construction rudimentary, not only because it was then, rudimentary, but also because this market is, as I've said earlier, way behind both Chicago and Kansas City in its construction. You only need to look at where the flatlining long moving average is at, which is currently 1032, and the declining medium moving average, currently 977, which incidentally has seemingly triggered the latest move lower. You only need to see the relative position of these moving averages compared to the same moving averages in the other markets to appreciate how backwards the actions have been here. Anyway, last week the market broke down through the lower trend line of this bull channel come ascending expanding wedge pattern. This now leaves us with the same two avenues that I can see for this in Chicago and Kansas City, though there are no doubts more scenarios available that will make themselves known. First is the straightforward move down with potential targets for the bull channel, come ascending, expanding wedge pattern. Thus we have a primary target X on the downside quite a way lower compared to the other grains involved in the 883 area, whilst the secondary harder to reach target X1 is down in the 840 area. This leads to the second avenue. It is a possibility for the whole of the July to day action to be some sort of rounded bottom with a rounded bottom, but a rounded bottom with an extension. These extensions have something like a bull flag within them, and that is what may be being built since early September. Personally, it looks a little slack as a pattern. But here's the key. If the previously mentioned short medium moving average, that's a little below current levels, or even the 50% Fibonacci line of the August 20 to May 2022 move at 955, if they manage to hold the market up and then we see prices revert back up, well, then this second scenario, the larger rounded bottom with an extension, that may or may not be a bull flag, well, that suddenly all becomes a lot more interesting. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.